Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Gianni Kovacevic, an investor and author who started various successful companies in the junior mining sector. Welcome back, sir.
Well, happy early 2025. Nice to be back with you, Ivan.
Yeah, you know what? I wanted to get you on, and it is 2025, the start of a new year. So I want to thank you so much for coming down to Wall Street Bullion. But let's start off with silver and gold. There's been so much talk about, in the markets about where we're going for 2025. Where your thoughts are for 2025 for silver and gold?
Well, I've never been a gold bug. People that have followed the things that I've covered over the last 20 years would know I'm more of a copper electrification guy. But of course, I have been involved in gold companies and silver. And I would say silver would be the outperformer. It has all the same speculation sort of excitement when the market is wanting these precious metals. It has it plays catch up to gold, but it's very much an industrial metal. So I don't know the exact math, but it was before maybe 60-40, sort of like more precious metal industrial use. And now it's maybe 60% relying on the industrial portion of how good the global economy and where it's going to be used. And compared to where gold is just, in my view, it's as everyone knows, it's a place to store wealth, but it's also a currency. For many people, gold is a currency. When you have, no matter where you're from, whether you're living in Turkey or Russia or you're a central government, they're going to park a portion of that. And depending on someone's risk tolerance, they'll park more or less in gold. But what's the big problem with both of them when you're talking about them as a store of value or precious metal for that purpose? These cryptocurrencies. You
Right.
have to be honest with yourself. That too is a currency or somewhere where people, and of course they're voting with the price, and you see now with hedge funds and pension funds, they're allocating a little bit to these bigger, namely Bitcoin and Ethereum. So what used to be, and now it's, there's a value there of some few trillion of dollars, that definitely is taking a bit of the shine from those that traditionally would have bought gold and to a lesser extent silver. So I don't see that changing this week or next week. So if you look at the broader 2025 on Monday, Trump is going to be inaugurated, and he has all these people that whisper in his ear, and they're even getting more of an understanding on becoming more of a crypto center. You don't
Right.
hear them talking about becoming a gold center or increasing the amount of gold that may or may not be in Fort Knox.
I
So
wish. I
that's
wish
a
they
headwind.
did.
That's going to be a continued headwind for gold. So that's why I like silver a bit more, because it has all that sort of poor man's gold features, or people buy it as a precious metal, but it
Right.
has that big, very important industrial factor. I understand about 60% of its value is attributed to those fundamentals, and gold just does not have that.
And I wanted to get you on too to talk about copper. You have so much, knowledge in the space with copper. Where are your thoughts for copper, and what are some interesting facts you can tell us all?
Well, the headline here should be there was an article in the Financial Times of London that came out yesterday, Thursday, January 16, 17, whatever that might be. And they're talking about the super cycle in China. Is it over? Which
Hmm.
doesn't mean it's going to be like a devastation. It just means the growth, those big growth numbers that we used to see. And the big bellwether there is iron ore. They are not consuming as much iron ore as they have. So it's a bigger base, but now it's starting to roll over. But in the same article, they're talking about this continued march towards electrification.
Okay.
Copper has a very good growth trajectory. And you have to look at this over the long run.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metal storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
but lithium has even a better trajectory. So they see copper growing, the demand for copper go between now and 2040 growing by about 50%, the overall demand usage. Lithium is going to grow by 7x in the same 15 years.
Wow.
So this should have a positive sort of price pressure on copper, because we are not going to be able to build the future mines that are required at these copper prices. And I always talk about the inflation adjusted price. Copper is actually not bad. We're trading around 440, 450 here in the weekend before the Trump inauguration.
Okay.
And you have this, everyone wants exposure to copper. Everyone knows about that, but it's going to be very dear. If you have existing production, it's going to become more and more valuable. So yes, I would submit to people that if you're a speculator, and people that are watching this show, they're speculating in gold, probably talking about shares, owning juniors or developers, and copper. For every $100 that you allocate, I would submit to people, you probably want to have a heavier weight to copper than you do to gold. And there are 3 ways that the junior mining speculator can play copper. I talked about it last time, and we can elaborate a little bit more, but it's the drill hole play, the optionality play, and the school bus. If you don't put capital at risk, Ivan, you're not going to make outsized returns. So you have to look at your portfolio and see where you want to be. But I'm still playing, with what I believe is good science and people that can raise capital and have, legitimate chance of finding a new discovery, because that's where the hockey stick sort of performance can be. And not that I'm so much doing it with gold, but I definitely am doing it with copper. And I think that's where people need to look. Have your weight on copper to gold, and look at those 3 buckets, and which bucket do you want to play in, and where's your risk tolerance?
Yeah, absolutely. Now, for all the new investors and all the new, stackers out there and all the people who are in precious metals, what's the difference between, the optionality play and the school bus play and the 3 that you mentioned there?
Well, let's use an example. Of course, I'm talking my own book, and I have speculated by buying a Peruvian copper drill play. It's called Copernico. The symbol in Canada is COPR. They're drilling 30 holes in a very prospective area, and it took them years and years to get this thing consolidated and permitted for drilling. They've drilled their first 12 holes, and they announced today nothing spectacular has occurred yet, but they continue to drill. And there's a lot of smart people involved in the play. It's been blessed by a major, Tecominco, and others. I think BHP has some of their team involved, and they continue to drill. So I'm speculating that this team is going to be able to discover something there, and we'll see what happens there. That's a drill hole play. The optionality play is a little different. So you're looking more at something that maybe it has the resources defined. They're not really going to grow their resource anymore, and they have an economic model. So the denominator there, the thing that makes it move up and down, is the copper price. The stronger the copper price, you have the economics get better, but you also have the propensity for a larger company to want to buy a project like that.
Right.
And so that's where you could have an overnight takeover type of situation. And the company that I talked about last time, these are all having pretty good performance here in the last sort of couple months. Entree Gold. This is something that has been around for like 20 years. And it was the extension of the famous Oyu Tolgoi mine in Mongolia that Rio Tinto acquired from Ivanhoe. Well, that mine plan is now encroaching into Entree Gold's property. So either Rio Tinto is going to pay them a lot of money year after year over the next sort of 15, 20 years, or they're going to buy these guys out, Entree Gold. I believe they're going to get bought out. So that's an optionality play. You're not looking to grow the resource anymore, a lot less risk. The biggest risk there is the copper price. You have a collapse in the copper price, probably the value goes down. And then you have the school bus. A school bus is a copper play that has assets. It'll have shares, royalties, net profit interest. And a company, Horizon Copper is one such company. It's owning a lot of shares in Entree Gold. So if that's bought out, that's going to be good for them. But it also has a net profit interest in the Antamina mine in Peru, like 1.6%. And it owns 30% of the well-known project in Turkey called Hot Maden. So you're never really things not going to have too much negative performance. But when these other things are successful, I think you still get that outsized return, but it's going to be a lot less volatility in something like that. So you have to pick where you want to be. Myself, I'm a speculator. I like the drill hole plays. if you discover something world class in a world class district surrounded by world class mines in a commodity that that's growing like copper, that's a type of potential, and that's why I like Copper Nico. And I'm going to follow it. They're going to drill their 30 holes, and we'll see. Downside is maybe a nickel if they miss. Stock's already down, but if they hit, I think you can make 3, 4, 5x in my opinion as a speculation.
Now, how can you tell between, I guess, a real copper or any type of company for like mining in the silver, gold, or copper industry? How could you tell from like a real explorer and a real explorer from like the ones that are, like I know in the industry for many, many years they talk about, just like not the real companies or don't have real management or don't have like a real like basically the ones that are not that great and you shouldn't put your money into. So how do you tell the difference between the two? What do you look at? Do you look at the management or?
Well, that's obviously management. What they've done this before in that commodity in that area and with the team. But here's some big ones. When a drill hole play is blessed by a major and a major puts real money behind them. In the case of Copernico, Tech bought. They did a 50-cent financing, and Tech took 10%. They own 10% of the company now.
Okay.
So you would think that a large company that your 95% of your due diligence is done right there. They've already blessed it. And remember, they can't take money from 5 majors. So once the first one is in, and a lot of the team are ex-BHP guys, so you've already got 2 sort of vetting of the chance. It's still risky. It's a drill hole play. If they don't find
Yeah.
copper, of course, it's not going to go to the moon.
Right.
But they also have a contingency. So they raised real money. So if someone's drilling 2 holes or 3 holes and they raise $1 million and they're going to scrape together, these things, sometimes these famous deposits take 50, 60, 100 holes. The stories you'll hear about SK Creek and some of these big discoveries that the science tells you have to keep drilling and drilling because you have not drilled it to kill it. You're
Mhm.
vectoring in on where the resource could be. So you don't want to be in a drill hole play, way too risky. If they've only got $1 million and they're going to drill 2 or 3 holes, who knows what can happen?
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking.
So you
Yeah.
want to have a lot of cash and a contingency. These are deal guys. The guys in Copper Nico have had success. God forbid it's a total miss. They drill 100 holes and nothing happens. Well, guess what? In between the results, they're going to find another project. They're going to have stronger share capital. They're going to be able to merge something in, probably something with a resource or something that's more established. It's going to be dilutive, but it's going to be a contingency. The little guy can't do that. The company just gets killed, if
Yeah.
they drill their 2 or 3 holes. So those are some of the things to look at. Vetting by a major, lots of cash, team that's done it before, and a contingency. What if we miss? What if every hole's a miss? So, and that's
Yeah.
some way to mitigate some of your risk there.
Yeah, no, that's absolutely fantastic, Gianni. Before you go, I really would love for people to connect with you. I'm going to put your links in the description below. But where can people connect with you?
Well, Twitter's a good place. I got about 5,000 people that follow me there. Haven't
Nice.
been so active, but I'm going to be a little bit more so this year. I think 2025 is going to be a good year for electrification. A lot of
Absolutely.
data points, and I want to share those data points with people. And my handle is Gianni Kov on Twitter. And from there, you can find my website and everything else and some of the other interviews I'm doing.
Okay.
And we didn't talk about lithium today because I know it's in the doghouse, Ivan. And just to sum it up, I think all I could say is the lithium market is so decimated that, as Warren Buffett would say, you don't even need a pencil and paper. It's so obvious what's going to, the decimation in the share prices. The question you have to ask yourself with lithium, if you're a speculator, do you want to participate in the first 50% up leg?
Right.
This is going to be a layup. When a stock goes from $2 to 20 cents, and it's not going to 5 cents, it's still got capital and a strong team. For it to go from 20 to 30, that's what I call a layup. Hasn't occurred yet with the lithium shares, but it will, I believe, in my opinion, happen in the 2025. Do you want to participate in the first 50%? That's going to be
Right.
the easy money, but you
Yeah.
got to be in. So if people want to speculate, that's something to take a look at a lithium junior. That's your favorite.
Yeah, you know what? I'd love to have you back on in the near future, and then for our next episode, I'd love to deep dive into lithium. So I'd love to have you back. But Gianni, such a huge pleasure having you come down to Wall Street Bullion, and yeah, in the future, I'd love to have you back.
Thank you so much.
No problem.
We'll touch base and maybe sometime after the inauguration.
Yeah, of course. I'd love that. Okay, talk to you soon, Gianni.
Okay, bye now. Take care.